Welcome to Markets Now. I'm Michelle Rook with Kent Beadle with Paradigm Futures, seeing red in both grain and livestock futures trade this morning. Kent, good to have you along. Let's talk a little bit about the risk-off environment that we're seeing, especially in the grain, some of that tied to some of these economic announcements overnight from Argentina, right?
Yeah, they had made an announcement that they were going to stop issuing any export licenses. And, on first glance, that would sound bullish, but it was the reason why they issued that announcement. And that was because there's an assumption that the government is, in fact, going to devalue the Argentine currency. And as a result, there was a huge move by commercial grain firms in Argentina to go out and move to start to pre-sell the Argentine corn crop that is currently in the ground and actually under some pretty good conditions this year for the most part. And so, we heard rumors that on Monday there might have been 2 million tons of corn that was sold. On Tuesday, another 1.5 million, for a total of 3.5 million tons out of Argentina in just 2 days. That's a pretty sizable amount of corn that got pushed onto the marketplace, which prompted Argentina to issue that pause in export licensing.
So the big question now, Kent, is are they going to lower export taxes on grains?
And, there are rumors, certainly that is the platform upon which the new president ran. However, there have been rumors in the marketplace that he is not going to cut export taxes, at least immediately. Hearing some chatter that maybe they'll do that in wheat, but they've got a problem. They still have to fund the government, and agricultural exports are one of their most reliable revenue sources. And so, he's got a bit of a problem wondering where his revenues are going to come from.
So if they were to lower export taxes, though, that would be negative for the U.S. because it would make their product cheaper, right? Their exports cheaper?
Of course it would. Although I have to say one thing about this, okay? The marketplace looks at places like Brazil and Argentina, and frankly, just about every competitor that we have. And they make assumptions that based on the amount of grain they produce, that they're going to export pretty much every available bushel every single year. So at what price they export it at, I mean, if you're going to take all of their excess production and put it into the export market, the price they export it at really doesn't matter if we already assume that they're going to export it. And that's one of the things about what happened yesterday or the last 2 days is we're talking about corn that was going to be on the export market that the marketplace would assume was going to be exported. Just a question of timing as to when.
Yeah, no, that's a good point that you make on that. So corn and wheat reversing after a big update yesterday in the wheat market. And, I was looking for a reason why wheat was up, of course, only to hear that maybe there were more rumors that China was going to buy both corn and wheat. We still haven't gotten any big confirmation of any flash sales there this morning or on the weekly report.
No, we haven't. Although, it should be said that we were selling, single cargoes of wheat to China before we started getting that series of larger announcements last week.
True.
And we've had some sales of corn as well that have been showing up on the weekly report. So not all the business that we do is in the size that needs to be reportable every day. I do think I was just actually looking at the spread today. It looks like U.S. corn right now relative to Chinese futures discounted at about $4.10 a bushel, which is kind of in the middle of the range that we've been in. It certainly still works for China to buy U.S. corn if they would like to.
Yeah. And we did have some bull spreading in HRW wheat yesterday. So that may be, sometimes when there's smoke, there's a little bit of fire. The other thing we should talk about, we're still kind of sitting on pins and needles here on Brazil. Weather looks like hot right now. Maybe we'll see some moisture in the extended, but that always keeps getting kind of pushed back, doesn't it?
Yeah, the extended is one of those things that the bears certainly are talking about. And let's be fair, we're going to make yield during pod fill, no different than we do here in the U.S. And that January timeframe is going to be really, really important. There are a number of meteorologists who believe that is a period of time that is going to be better for rainfall in Mato Grosso and Bahia and Tocantins, places that have been very, very dry and have had, consistently had some rainfall, but less than normal. And one of the things that I think is going to be really interesting is, what has been the impact of the weather to date, or what is that going to be? And one of the things that I hear about Argentine farmers is that what they're buying when you buy land and you farm in Argentina is this promise of consistent rain. And it just hasn't been consistent. It isn't that they haven't had rainfall, but the amounts have been less and the consistency has not been there. And so, how does that match up with their soil type and their hybrids in order to determine where their yields are ultimately going to be? And that's where some of the concern in the trade happens to be right now.
Okay. We also have the FOMC announcement that'll be out today, most figuring that we're going to see a pause, but there is some other news that's going to come out there after the meeting. We always watch to see what Chairman Powell does, but the dot plot, what is that going to tell us?
Well, what the dot plot is it's essentially a forecast by each individual member of the Fed saying where do they think interest rates are going to be each quarter going forward. So you end up getting to see a progression of how each individual member thinks interest rates are going to progress over time. And given the fact that the entire financial market right now is mostly worried about, number one, when are interest rates going to be cut, and how many times next year, that's the key that Fed Chairman Powell has not talked about, has basically said it's too early to talk about it. But with the dot plot, everyone's hand is forced and you get to see what their thought process is going forward.
Okay, we'll see if we get these 24 cuts like everybody thinks we're going to get. Cattle market is obviously sensitive to that news, all the other economic and equity news. But right now, it seems like we had 3 days up, and I'm just wondering if the funds are using this today as a strength point to sell and liquidate more again.
Well, they did finally cut a little bit more of their position as of a week ago Tuesday, according to the CFTC report. They were still net long, obviously about only 25% of the position that they had at its peak. I think that with all of the rumors that we had last week in the cattle market about entities potentially being on the wrong side of options positions associated with the LRP program, those are the kinds of events that oftentimes make a low. So, you have three, fairly solid up days in the cattle. It just doesn't surprise me that we have a little bit of back and fill here today.
Okay, so you think 3 days higher is enough to confirm the low technically, though?
Well, I'd love to confirm the low. My gut says the low was made last week.
And what about hogs? We just cannot get the cash market to catch here. That certainly continues to be a headwind for the hogs. We're down again here this morning.
Yeah, we ended up the week with a higher cutout, and I thought maybe that would be the trigger here to get hogs, a little bit firmer. But the truth is we still have an awful lot of pigs that need to move, and our slaughter this year is up, I think, 1.7%. We're searching for that seasonal low, but it doesn't appear like it's in sight yet. And ultimately, the futures are going to have to go lower until we start to find a catch in the product. And with the cutout actually lower yesterday, we haven't got there yet.
So is that too much supply or weak demand or both?
At the moment, I think it's too much supply. The demand actually has been okay this year, or maybe better than a lot of people thought that it would be. and certainly the discount of pork to beef, even with beef having come down quite a bit, bargain shoppers should still be looking at pork, but I don't think that it's a demand thing as much as it is a supply thing right now. Again, 1.7% higher in the slaughter year to date is a lot of additional pork on the marketplace.
Yeah, it'll be interesting to see if those numbers are also confirmed in what we're thinking ahead when we get Hogs and Pigs report. I think that's out next week already. So
yeah, and of course the other thing there we're going to look at is what is the industry feel about moving forward here with the
Prop 12.
Yeah, exactly.
Yeah. All right. Thanks for joining us. Kent Beadle with Paradigm Futures. That is Markets Now.